It was a blockbuster rally on Dalal Street today. Indian markets cheered the fiscal stimulus package announced by Finance Minister Nirmala Sitharaman. Before we get to nitty-gritties, let's just spend a moment on the impact on markets. It was humongous. The Sensex gained 1,921 points today in one day. In percentage terms, it's an intraday gain of 5.32%. The Nifty also posted gains of more than 5%. The rally extended to sectors as well. Mid-caps, small caps, everything soared today. In one day, investors' wealth rose by 7 trillion rupees. It's the highest single-day gain in 10 years. It's huge. All these gains are due to the much-needed boost given to India's companies by the government. Nirmala Sitharaman ushered in game-changing corporate tax cuts today. Let me summarize the government's decisions in a few points. 1. For companies that do not avail tax incentives, corporate taxes have been cut to 22%. Earlier it was 30%. With surcharge, these companies will now have to pay an effective corporate tax of 25.17%. 2. New manufacturing companies will only have to pay a corporate tax of 15%. With surcharge and cess, the effective tax stands at a little over 17%. This is a massive reduction from the current level of 25% corporate tax. Point number 3 to note, for companies that avail incentives, the minimum alternate tax or MAT is cut to 15%. The current rate is 18.5%. Point number 4, the increase in surcharge on capital gains has been rolled back. The surcharge was hiked in the July budget this year. This is a huge tax relief. The rationale of the government is very simple. These tax cuts will encourage businesses to invest more in the economy, and this will revive growth, which fell to a 6-year low of 5% in the last quarter. Private investment in the economy has remained tepid for a few quarters now. These announcements are expected to boost the sentiment, but the government would also have to account for the revenue loss due to these measures. There will be an impact on the fiscal deficit. The finance minister says that the government is aware of all of this. They are prioritizing private investment in India's economy.
The total revenue foregone for the reduction in corporate tax rate and other reliefs is estimated 1,45,000 crores per year.
Experts say the fiscal deficit will surge by at least 70 basis points to nearly 4%, but the consensus view is clear. This action was needed. The government has been in consultation with India Inc. on a regular basis. This action and the subsequent market reaction demonstrate the importance of today's move. This is the most decisive step announced by the government to arrest the economic slide since returning to power. If you look at it, the last time an Indian government pump-primed the economy was during the global financial crisis. But then the government spent directly on the demand side to boost domestic consumption. Now the Modi government has chosen the path of tax relief. This will give India's companies some much-needed breathing space. Corporate earnings in the last few quarters were patchy, and these measures would revive the momentum in markets. In simple words, it's a toss-up with growth and fiscal stability, and the government has done its bit. The ball is now in the court of corporate India. Companies must use these tax benefits on capacity creation and on investment. Meanwhile, as the stock market surged today, fiscal deficit fears gripped India's bond markets. Bond yields jumped over 15 basis points. So the next challenge will be to insulate the economy from fiscal risks. For now, the government has taken a decisive measure, we say, in the right direction. It has listened to the concerns of corporate India.